Welcome to the deep dive. Great to have you with us again. Our mission, as always, is to cut through all that noise, grab the crucial insights from complex info, and just get you informed fast. We aim for those aha moments without the usual overload. Today, we're doing something a bit different, putting on our detective hats maybe. We're investigating a specific stock, ticker FAF. So if you're curious about how market analysts look at charts, how they try to predict potential paths, well, this deep dive should shed some light on that whole process. It's kind of like solving a market puzzle.
Exactly. And when we talk about technical analysis, we're really zeroing in on the stock's own behavior. It's all about the story told by its price movements and the trading volume. We're not digging into the company's fundamentals like their earnings reports or balance sheets. It's fundamental analysis, a different beast entirely. Here, we're looking for patterns, trying to gauge market psychology based on how the price has acted historically. It's really about learning to read the language of the charts, you know?
Okay, right. So let's open up the case file for FAF. Looking at the big picture first, the monthly chart. What's the first thing that really jumps out? Maybe starting back around March 2020.
Yeah, that March 2020 candle is absolutely key. It formed what technical analysts call a large rejection candle right around that $29 mark. Picture this. The price is trying to push down, maybe panic selling is happening, and then bam, a huge wave of buying comes in, pushing it right back up. It showed really strong demand at that level.
A rejection candle. So buyers just refused to let it go lower there.
Precisely. And it wasn't just a random bounce. The analysis points out that this candle collected retail traders' sell-side liquidity near a previous major support zone. So what does that mean? Well, think of it like this. Near $29, a lot of smaller investors may be worried we're selling off their shares. But the bigger players, the market, if you will, saw value there. They basically swept in and bought up all those shares being sold. They absorbed the selling pressure. That action established $29 as a really significant historical floor for FAF. It's a great example of how charts can show resilience, even amidst widespread fear.
That's fascinating. Just one candle telling that whole story of a turnaround. Okay, so after that big bounce from $29, what's the bigger picture been like for FAF since then?
Well, after establishing that solid base, FAF kind of settled into a more consistent upward movement. Looking from October 2022 onwards, it's been trading inside what we call an ascending channel. Visually, it's like the price is walking upstairs, contained between two parallel lines that are both sloping upwards. It goes up, pulls back a bit, goes up again, but stays within that channel.
Okay, so a steady climb overall within those boundaries.
Yeah, it suggests a pretty healthy long-term uptrend. Oh, and just for context, the current market price right now is hovering around $62.70.
Got it, $62.70. Now, drilling down a bit more recently, I see the notes mention the July monthly candle. It talks about a strong rejection from the $53 level and also an ultra high volume bar. That sounds important. What's going on there?
Oh, absolutely. That July candle is really telling. The strong rejection from $53 means, again, the price dipped towards that level, but buyers rushed in very aggressively. It's like hitting a trampoline, a powerful bounce. But the crucial part is the ultra high volume that came with it.
Right, volume being the number of shares traded.
Exactly. So ultra high volume during that rejection means a massive number of shares changed hands right around $53. This wasn't just a minor price flick. It suggests huge conviction, especially from buyers. They strongly defended that $53 level. It often signals a potential turning point, or at least confirms $53 is a very significant area of support. It's like a loud statement from the market.
Okay, so the big picture's up, but with some key defense points shown recently. Now, the monthly chart gives us the long view, but what about the shorter term? What happens when we zoom into, say, the weekly time frame for FAF?
Right. Zooming into the weekly gives us a closer look, more granularity on the recent action. And what we see there is actually quite interesting. Currently, on the weekly, FAF is trading inside a short-term descending channel. Remember the long-term ascending one? This is the opposite price, contained between two parallel lines sloping downwards.
Okay. So long-term up, but short-term down. How does that work?
It's actually very common. Stocks rarely move in straight lines. You have the major underlying trend, which is up in this case, but within that you get shorter periods of correction or consolidation, like the stock taking a breather. This descending channel shows that recent pullback. The weekly view also shows that the stock has already tested the $50, $53 demand zone.
A demand zone.
Yeah.
That sounds like where buyers hang out.
Pretty much. It's a price range where historically buying interest has been strong enough to overcome selling pressure. So when the price enters the zone, you expect buyers to step in. The fact that FAF tested this $50, $53 zone recently, especially given that strong July rejection we saw in the monthly, makes this area particularly important. It suggests a higher likelihood of a bounce from around here.
Okay, so it feels like FAF is at a bit of a decision point then. We've got the long-term uptrend, this short-term dip into a key support area. So what are the potential ways this could play out, according to the analysis? Let me start with the positive case, the upside. All right, the upside scenario hinges on the price breaking above a certain level. The analysis points to $67. If the price breaks and closes above the $67 level, that would be significant, wouldn't it?
Highly significant, yes. Because breaking $67 wouldn't just be clearing a resistance level, it would also mean a breakout of the short-term descending channel that we just talked about.
So escaping that downward path it's been stuck in recently.
Exactly. It signals that the correction is likely over, and the buyers who are waiting on the sidelines might jump back in. It often creates its own momentum, you know? A breakout like that can attract more buying interest.
And if it does break $67 and gains momentum, where might it head?
Well, the analysis suggests that clearing $67 could open the way for a move toward the upper trend line of the ascending channel, which is projected to be near $74. See how it connects back. Breaking the short-term downtrend could propel it right back towards the ceiling of its long-term upward path. That $74 level becomes a logical target.
Okay, $74 makes sense as the top of that long-term channel, but then it also mentions potentially even higher. A retest or breakout above the all-time high of $81.50. That sounds like a big deal.
Oh, it is. What's really fascinating here is how these levels work. $74 is hitting the top of that established channel, like you said, a natural resistance point based on the trend. But $81.15, the all-time high, that's pure psychology and uncharted territory. When a stock breaks its all-time high, there's no overhead resistance left. Nobody who bought higher is waiting to sell and break even. It often leads to what they call price discovery, where the stock can really run because the previous ceiling becomes a new floor. It signals strong confidence and can attract a whole new wave of buyers. So yeah, $74 is the target, but $81.50 is potentially opening a new chapter.
Right, makes sense. But of course, things don't always go up. There has to be an alternative scenario if FAF doesn't manage that breakout above $67. What's the potential downside look like? The analysis lays out a downside trigger too if the price breaks and closes below $50. That seems to be the key level on the other side. If that happens, it suggests the stock could revisit the $44 level.
Yes, and breaking below $50 would be quite telling. Remember that 53 demand zone we discussed? The one with the strong July rejection.
The trampoline level.
Right. A close below $50 would mean that trampoline failed. It implies that the strong buying interest seen there has dried up and sellers have taken control. That strong floor would essentially have broken.
Okay, so the support fails. And why $44 specifically as the next potential stop?
When a significant support level like $50 gives way, analysts look for the next area where price found support previously or where a lot of trading happened. $44 likely represents such a zone based on historical price action. It becomes the next logical place where buyers might try to regroup and make a stand. It just highlights how these levels aren't random. They represent past battlegrounds between buyers and sellers, and the market tends to remember them.
Got it. So let's quickly recap the two main paths here. FAF seems to be at a critical juncture. Path 1, break and close above $67, which could lead towards $74, maybe even challenging the all-time high, around $81.50. Path 2, break and close below $50, breaching that recent support, which could see it fall back towards the $44 level.
Exactly. And this really brings up an important point for you, the listener. How do we use this? Well, these levels, these patterns, the channels, the rejections, the zones, they provide a framework. It's not about guarantees. It's about understanding probabilities based on past behavior. By learning to see these things on a chart, you start to understand the story the market is telling. You see where the big decisions are being made, where the conviction lies, where potential turning points might occur. It's about reading those signals the market gives off.
Yeah, it really is a fascinating way to interpret data, isn't it? And that skill of identifying critical points and underlying trends, well, that applies way beyond just stocks. Really, in almost any field, it's about learning to spot the clues. Well, that's all the time we have for this deep dive. Thanks so much for joining us. Keep exploring, keep observing, and we'll catch you on the next one.